Good morning, traders. It's Sunday morning. Well, it is here anyway. I like to make a video when I see something that I consider is massively important, and this is a sort of a 2B reversal come system reversal that ticks so many boxes. It's amazing. But the most important part of this for me is the actual last hurrah type reversal bit. Lots of people trade all these different 1, 2, 3 reversals, 2B reversals. They call it all sorts of different names. Doesn't matter what you call it, it's all the same thing, and no one should get the credit for inventing it, as it were. But there are lots of different sets of rules for trading it with confidence, if you like. And what gives me the confidence is my sort of 3 candle reversal scenario, where you study the 3 candle reversal videos, hopefully, and a lot of my charts on Twitter, and hopefully this will explain why the 3CR is slightly different than everything else I've come across, because of the way I visualize the charts. And this little bit here, this is so important, because this is where price has reversed. If you like, that there is sort of a critical level, not this blue line here. That's just to highlight this level here, the last area where sellers overwhelm the buyers. Over here and here, at this point, the break of that low there, the buyers got broken by the sellers, came back up to test to see whether it can continue up again, and it failed. At this point here, the buyers were overwhelmed by the sellers, and at no point, this pullback north didn't break the sellers there and go up. This one broke down, didn't break the sellers and go back up, and we continue on down, keep trying to break the buyers with the sellers. And this one, again, didn't break up. But notice also the power's dwindling. The down moves are getting smaller and smaller. Not so obvious here, but definitely the power to the downside is running out here. And this is the critical bit, because at this point here, this was the last point that sellers overwhelmed the buyers by breaking the low there, and then they've come back up, they've tested it again, they've finally broken through it, and then they've come back to test the level as to see whether the buyers that can in fact be overwhelmed by the sellers, and they have not. Buyers, sellers came to test them, buyers overwhelmed them, price goes up. The indication that it was all over was this blue line here, this horizontal, but we've also got a solid 3CR going on in there. But I won't go into the candles because they are a mess, but that's all we need, the line chart. And then we've got clear divergence here as well, a low and a lower low that made a low and a higher low. Clear signs of the price, the power to the downside falling off. But this is the point of this video, not all of the other stuff. That is the critical point to me, the fact that the last, it doesn't matter that it's small, it is obviously a part of the thought processes, perhaps for me now subconscious, but that's what I'm looking for all the time. It could be, we could have gone up and then made another one, and that level there, let's just draw that in to try and hammer home this thought process. If this low here had been broken by price down here, then that level there would be the new reversal level, and that's what I'm looking for. That level there would have been the new reversal level. And then everything else on my chart helps me as well. All my stuff on my charts now are critical to my thought processes. People lambast me because I have indicators and it looks like a mess, but I can trade without them. I can't stress that enough. But why would you reduce your ability to be a better trader just because someone tells you you're a crap trader because you use indicators? You wouldn't get Formula One racing cars taking stuff off their cars because it's doesn't, you know, because after it makes them better drivers or whatnot. The analogy is the same, but this is the point. That last buy-sell fight zone, if you like, is critical, and that's why we can get in so tight with smaller stops and better confidence, belief in the method. And it's just that thing there is what the 3CR is telling us. The 3CR high is the high of the last level that has pushed the price down. That's the penultimate candle high. Look at the 3CR videos, and that effectively is what that is. And then when that high is broken by price and closed through this side of the game, which is what basically that one showed us, coincidentally as it is, then that's the area that we get really excited. And then, you know, it doesn't mean 100% price is going to go up, but it is the point that I start to get really, really interested. If I haven't got that scenario, this break of the last sellers in the market, then I'm not that interested. I want it to tick all my boxes. So that's the whole point I'm trying to make. That was the proper level. That was my new hypothetical one because of this new low here. And we've got the divergence. So that then becomes a better entry than that one, because it is the most important entry. In other words, the last entry, the last possible. I know it's hypothetical, but hopefully it helps indicate what I'm talking about. So we haven't got to break that one. We haven't got to break that one. We've got to break that hypothetical one. So we haven't got to break up here, because and the point I'm trying to make is then this is primary, these become secondary levels because they've been broken ages ago. We want to get the latest break and reversal so that we can get in with the best possible price. And as I mentioned about the indicators, you know, these intertwine on the time frames. Look how the 89 EMA was tested, I'm talking about the pink one, finally broken, and then price just took off. The 34, which is the central grey line, test, broken, did a little pullback, but that's not to be worried about because the stop's always down here, which again is why if you were entering up here, your stop has to be down here. If you're entering up here, your stop has to be down here. So when you're entering here, your stop is minuscule in real terms. And then just lastly, we'll talk about the 89 and 34. Drop down to the 5-minute chart. I've put my vertical on there to show you where the 34, in fact we'll move it over a bit, show you where the 34 actually got busted, and then put it on the 5-minute, and you'll see that will then become the pink 89 EMA. There it is there. Pink 89 EMA got closed through, tested again, or retested, and then we've also got the lower time frame, the 1-minute pink 89 EMA would be this point here, the 5-minute 34 grey EMA. So that's how it all ties in. So when I'm above that 34, I can get a slightly earlier entry, and notice none of the entries are to the left hand side are valid until at least we've got that above there, and that's why all of this starts to tie in. You can see clear divergence there with those two lows on both sets of indicators now. So this is why I use multi-time frame analysis, and most importantly that reversal scenario where the lowest point, there was no point, we got faked into a long. That's what I'm trying to say. No point we got faked into a long here, no point we got faked into a long here, then finally we've gone down and we've got the valid long opportunity. So hopefully that helps clarify why I am so behind what I do and why I have all the indicators on this chart that people take so much pleasure in slating me for. So thanks for watching, have a great Sunday, and I do hope this helps somewhat.